So hi everyone, I hope you're doing really well. Welcome to this video where we're going to be answering this question from Demosthenes 1, and he asks two questions at the end. When you refinance after refurb, do you have to wait 6 months? And what type of mortgage does a refurber typically get? And I'm going to answer that second part first. We tend to do, and what's right for you is going to be different, but what we tend to do is we tend to do a buy-to-let 2, 3 or 5 year fixed product. So we don't do trackers, and buy-to-let, by the way, stands in its own distinct category. It's not residential, it's not commercial, it's like a hybrid of the two. So a buy-to-let 2, 3 or 5 year fix. And what I'm going to do is I'm going to explain to you a property where we've got the wrong refinance. I'll also explain the silver lining to it, so stay tuned towards the end of the video. So that's the type of mortgage we'd normally get. And do you have to wait 6 months? And the answer to that question is no, you don't. It's not law, it's not a rule, it is a guiding principle. You can refinance within 6 months. However, essentially you are incentivized to wait for 6 months or longer. And by that I mean what lenders typically do is they give very high interest rates and or fees. And by the time you've got your refurbishment done, you might as well just wait for 2 more months and get your 5 year fix, 2, 3 or 5 year fix at 6 months or just a day after. So why do I say wait 2 months? And the answer to that is when you buy a property that needs a refurbishment, you are probably going to have to wait some period of time for your refurb team to get started. Now for us it's about a month, it's about 4 weeks, sometimes a bit longer, sometimes a little bit shorter, but basically you have to wait. Let's say it's a month you wait, then your refurb begins. How long does a refurb take? Let's just say it takes 3 months. It's somewhere between 8 and 12 weeks on average. We have had one that took over a year, and that was a catalogue of mistakes. But generally speaking, 8 to 12 weeks, so 2 to 3 months. Let's just say it takes 3 months. So you're in at 4 months already, and then it takes 2 months for you to find a tenant. And again, if it takes longer than 2 months, reevaluate quickly and hard and make a decisive decision. You don't want that to wait any longer. You should be within 2 months. But then you now have 6 weeks or a month and a half before you hit that 6th month time period. So what we tend to do now is we will, before we even buy a property, I'll give a very quick call to Kit, our mortgage broker. And by the way, if you're new to the channel and you think, who is Kit? I have done an episode with him. See the iCard on screen. I'll also leave links in the description and at the end of the video. But I'll just run it past him and say, look, Kit, we're hoping to buy this one. Any reasons why we shouldn't? We want to do the refinance in 6 months' time. So I've kind of got my exit secured, particularly if I'm going to be working with private investors. I want to know I can get out of it. So it's already on his radar. I then do the refurb. I wait a month, 3 months for the refurbishment, 2 weeks for the tenants in. And what we then do is we start the application process and we get data and sheets and information. So things like the things that are being requested of us are end of year tax returns, schedule of works, costings, those types of things. I'd also then have to analyse the project itself, the house itself. So questions about when was it built, what's its construction, how much you think it's going to be worth, done up GDV. And by the way, I have done a separate video on working out N values, so feel free to check that out. Again, link in the description. And what it's going to rent for. And then you match up to a particular lender. Now that process is all lined up. So as soon as we hit the 6th month mark or the 6th month and 1 day, it's then hit send by Kit. It's then sent off, but all the prep work is done. We don't wait for 6 months and then go, right, now I'm going to start the refinance. So get the work done before, and then essentially it's landed on the desk at the 6th month mark and then hopefully processed fairly quickly. Let's just quickly talk about that one that went wrong. You see, you can buy properties with a mortgage, a buy-to-let property with a mortgage straight off the bat. However, we got unstuck with this. We did a call with Kit and we said, look, we'd like to do this project. However, we haven't got enough to buy it with cash, either our own or someone else. We'd like to do it with a buy-to-let mortgage. I know it's a bit of a risk, but can we please have a lender that's willing to do a further advance in 6 months' time? And what that basically means is they will look at your project and they're expecting you to come back to them at some point, 6, 12, 18 months, 24 months down the line and say, we think our house is now worth more. Please can we have a valuation on it? And please would you then give us a remortgage, a 75% loan to value at some point down the line. But you need to check that they are willing to do what's called a further advance. So we bought the house with a mortgage, we borrowed £22,000 for the refurbishment, we got stuck in, 6 months came, we applied, the valuer came around and said, you bought it for 116, you've basically done a £24,000 refurb, I think it's worth 140. We were gobsmacked. It's the worst down value. It's not really down value. It's the worst off value we've ever had. And normally I am on the pound through comparables using the process in that aforementioned how to calculate GDV video. So I was absolutely shocked, and I said to my investor, look, it's going to be worth 150 likely, 155 in best case, and 145 at worst. They came back and said it's worth 140. Now here's a tip for you. Make sure you have a contingency not just for your project, but a contingency for your business. And the bigger your business, the more houses you earn, the bigger the contingency must be. Because we had to make sure that our investor was paid back, even though our valuation didn't meet what we were hoping. Even our lowest value of 145, it came 5k under that. So we left another £7,500 in that deal we didn't want to. But we were still made sure we were still able to pay our investor back. They took it very well. It was a contract, and it met the terms of the contract. So what we did with him was on that one, we said that you can have a percentage of the uplift, and the uplift was up to 140. So it just didn't work out very well for him in the end. However, he has still gone on to done another project. It wasn't something erroneous that we had done or malicious. It was just a third-party decision that affected both of us. He has gone on to work with us subsequently. So fortunately that went well and we were able to pay him back. But 140 it was, and the reason why it went wrong is because we took the wrong mortgage product. And you might say, well, don't you work with Kit? But at the end of the day, it was our decision to accept that and to go ahead. In our business, the buck stops with us. So we had a project where we left too much money in. However, the silver lining that I mentioned at the beginning of the video is this. We subsequently purchased and owned and renovated next door, and that has just had a revaluation of 170,000. And that's not just theory, we actually had a refinanced land complete. We had £136,000 minus some fees land in our bank account this week after the refinance. So it was valued at 170 and they lent us, that was Metro Bank lent us on that property. So what does that mean? We now know that next door, the mirror image for the identical refurbishment has a £30,000 equity increase, and that means that next year, because we did a 2-year fix, we thought the economy is going up, the house prices are going up, let's do a 2-year fix, we can capitalise on that gain. Early next year we refinance, we know we at least got £30,000, assuming it's valued at 170 as well. I don't see why it isn't going to be, which means we can pull out 75% of that, or £22,500 straight back out of that further advance. So that's our second refinance. So I believe that answers your questions. When you refinance a property, you have to wait 6 months. No, you don't, but I absolutely suggest you consider doing it. That's exactly what we do. Wait 6 months, get all your ducks in a row. And what type of mortgage? We typically go for a 2-year fix, as an example, or a 3-year or a 5-year fix. And when we come back to refinancing next year, that property we're talking about, I'm going to do a 5-year fix. And here's the other thing. Here's why. What you don't want, well, up to you. Our risk appetite for this is not sufficient, so we stagger it, because let's say we've got 3 houses all purchased in 1 year, we've all got 5-year fixes, and suddenly in 5 years you're in a very unpleasant economic environment. You are now forced to refinance those properties in poor conditions. So what we like to do is we like to take a 2-year fix or a 3-year fix and a 5-year fix on different properties, so that the refinance comes around at different times. Sometimes you'll hit an up market, a flat market, or a falling market, but it doesn't mean we've got all our eggs in one basket. Thank you for your question, Demosthenes 1. I really hope that helps. In the next episode, I'm going to ask another one, and that is on this question, networking groups. We're going to talk about how we find our private investors, so stay tuned for that. The best way to be aware of that video is to hit subscribe and hit the bell notification icon. Please, before you leave, just give this a like. That's massively appreciated to us, please. If you do have your own questions, then feel free to get in touch with us. Again, see the information in the description below. Thank you for watching. Thank you for your support. We do appreciate it. We look forward to seeing you in the next one.